Okay, great. So, thank you very much, Nona, for that very generous introduction, and welcome everybody to this session on closing the gap, why innovation fails to reach construction. We've all seen the reports that show that productivity in real estate development and construction has flatlined over the last 100 years, and that's despite all of the fantastic innovation that we've seen outside here today and yesterday. And so the topic that we wanted to explore today was to try and understand and rather share with you our experiences as entrepreneurs and innovators of the non-structural barriers that are going on in the background, which are frustrating our collective ability to bring more innovative ideas into real estate and construction. We're going to try and split the session into 3, possibly 5 if we have enough sections. So we're going to talk about incentives for all of the different actors in development. We're going to talk about industry fragmentation, and then about how the companies that we sell to value innovation, or often, in many cases, don't. We have a couple of other topics if we have enough time. While we're talking, if you'd like to raise questions, that would be great, and we'll try and bring those questions in as we're having the discussion, so that the questions fit with the different topic areas that we're speaking to. I'm delighted to be joined on stage today by 4 phenomenal experts. From right to left, we have Renee Puusepp. Renee is an architect, a technologist, a believer in modular construction. He works with cities, real estate developers to design and deliver schools and other buildings using modular systems. Next to him, we have Patrik Lindvall. Patrik is based in Sweden, and for the last 20 years, he's been working with construction and residential development, particularly at the intersection of data, information, and technology, to see how we can combine those 3 to deliver better assets. Then we have Gregor Schulte. Gregor is a non-traditional technologist. He has a background of 15 years of experience in non-construction tech. Today he works with one of the Nevaris subsidiaries and breaking down the software silos at Nevaris. And last but not least, we have Philippe. Philippe trained originally in real estate, finance, and economics. He's spent almost 10 years working together with a large Swiss developer on a prefabricated timber product that he euphemistically called Best Age. For those of us who are 55 and above, apparently this is going to be our best age, and he's got a product for us. Today he's now working for a Swiss asset manager and responsible for about 600 million euros worth of assets. So, with no more ado, let's dive right in. And Philippe, I'm going to start by asking you a question, really starting on incentives. If we think about the different players, so investors, developers, contractors that participate, the fund managers, how do the incentives that they have, both as organizations and as individuals, influence their enthusiasm for innovation?
Thank you, David. So that's an interesting one. I think even though some investors or all investors are long-term, I mean pension funds, they should look almost eternally. But then people working there, of course, they are often incentivized short-termly, right? So you have maybe your bonus, but not even that is the problem. So sometimes you just want to have an easy life, easygoing projects, and by default you kind of stick to your processes, and you stick maybe also to materials, you stick to your partners, and so then you end up doing the same stuff again and again, even if the world changed and you have all these other players on the stage, you have all the other technology, etc.
And as an investor then, they're not losing out, or they don't perceive that they're losing out versus the risk of innovation?
Well, I mean, if it's about construction, if you talk about newly built, then also as a bigger investors, you maybe have 1, 2, 3, a handful of projects. So it's not so easy to scale. So it's not so easy to repeat, let's say, things that worked well, because then you are in a different city, you have different requirements. So that's a bit, from an investor's view, the challenge we have. This shouldn't be an excuse, of course, to do it. And I'm also wondering why investors don't collaborate more between each others, right? So I was wondering why we don't have these fucked up nights that's common in the prop tech scene. So we don't really talk about failures,
okay,
but it's just more about PR, etc. So that's a pity. Yeah?
Okay, and Patrik, if I can just pull you into the conversation, what are your thoughts about this coming from the digital side, trying to bring more technology? What's your experiences here been?
Well, I think the incentive model that a lot of the consultants, and if you especially look at the early stage design through to construction, kind of hinders innovation in a sense, because you get paid by the hour. So if you have a solution that makes you more efficient, that actually threatens your customer's model of making money, in a sense. So
okay.
we have these interlocking areas that kind of hinders innovation to take full effect in our industry. So I mean, I'll give you an example from a couple of years ago when BIM started to take off, and we made the transition from 2D drawings into BIM deliveries. Then, of course, we got a new tool, but we continued to use the same process. So we delivered flat PDFs using a modern digital tool for it. And once you start to kind of look into that a bit and you ask people, so why is it that you just deliver the PDF files? Well, that's what's in the contract. So I need to deliver it to get paid, but the amount I get paid is based on the number of hours I spend. And then you kind of ask a bit more, and so shouldn't you be able to do a digital delivery using a BIM model? And then the answer is, yes, of course, but nobody's asking for it. Then a couple of years later, I switched to a residential developer, and we started asking for it. And of course, the reply was, then it's going to cost you more.
And you make an interesting point there, I think, about contract and contract structures. Certainly my experience has been you often get from the lawyers, well, these are the standard terms and conditions which are common in the industry. But, well, okay, but I've got innovation, so everything's going to happen differently. I don't want the standard terms and conditions. And so some of those standard contracts that we know so well, I think also contribute to that dynamic that you're talking about.
Yeah.
But Renee, I mean, Patrik made a point there about the early design phases, particularly. What's your experience as an architect being on the other side of that conversation when you're being asked to be innovative, or when you're trying to bring innovation to a client or to a project?
Yeah, from the architect's view, I think architects are not typically paid for the performance or actually getting the benefits across. They are paid to do the job, get the building permit, get the design right. If they use some sort of innovation to achieve it, they won't actually get the benefit. So the incentives won't reach them. And if really the incentives don't reach those who should bring the innovation market, then that is a barrier. You won't bring it to the market. Who should be? From the modular side, I see some factories and some companies that have produced really good, efficient modular systems, yet the value doesn't reach the market. They actually use it to gain, market advantage. They still sell the market price, even if they actually manage to produce cheaper. And, there's actually a question of, okay, how do we bring then, how do we bring the benefits of innovation to the market rather just to the one who actually, develops it?
Gregor, I'm interested in your view on this particularly because you've come into our industry having worked in very tech-heavy industries where collaboration and bringing value to customers fundamentally embedded in what you do. How do you see this, and what's your experience been in the 2 years you've been working?
Yeah, so innovation is not an incentive by itself, right? So why do you innovate? The incentive with everybody in the value chain in construction is to earn money. And that's in an industry where the gross margin is super low already anyways. So the gravity towards using innovation to maintain the little bit of margin that you have is actually super strong. And when innovation is being done right, you do have the innovation gains, but you also make something better. So you can differentiate to a customer, right? But there's so many different customers in the construction value chain, right? And I worked in e-commerce a bunch, and you see that there the incentives are, okay, you make a product better and cheaper, so it flies off the shelf, everybody earns money, right? The mechanics in the construction industry are very different. And I think the whole innovation game has probably been largely defensive, especially in the last years where construction wasn't particularly booming. So I think the question has to be asked, like, innovation for whom? And what's the motivation behind it? And then it gets very nuanced, and I think everybody's looking at their fraction of the value chain. And now there's probably a couple of more things happening where functionally and experience-wise, things really are, like, there's aha effects all of a sudden, right? But so far, my take on the construction industry was like everybody's trying to maintain the status quo, try to get by, and maybe get a little bit more efficient. But I was also impressed by hearing, like, in the morning there was a panel here with Strabag and Svitelski, and I didn't have the impression, and this is what I get from our customers, like that they're really using an opportunity or seeing the opportunity in being innovative and doing step change disruptions and being better at something. It's really kind of staying on the plateau that you are and try to gradually improve.
If I could just, Patrik, come back to you again. You made a point about, I think if I understood correctly, about rather the interface between different parties, right? So picking up your point, Gregor, about fragmentation, is that also part of the issue, the kind of the combination of effects of industry fragmentation, information exchange, and lack of incentive to exchange information?
Yeah, definitely. I mean, there's so many different parties involved in the process itself. So a solution that kind of focuses on one part will make this part a bit more efficient, but it's not going to drive the entire process to be more efficient in that sense. So I mean, there's lots of specialist tools that will make me or my company a bit more efficient or very much more efficient. But the entire pace is kind of set by the slowest one in a project. So even if you gain an advantage, you can still utilize this incentive model that you have to actually charge the time for the slowest one in the group to get to the finish line. As someone mentioned before, it's a bit lazy. You just carry on, and some of the handovers is especially difficult when you have this fragmented market and also the fragmented tool sets, because you lose information across. And this is, I would say, it's also a challenge then for the tech companies. So how do you solve the problem of the fragmentation when it comes to all the different disciplines and also the handover the data? You kind of need to have some sort of a good ecosystem or eco-flow where you can have information and adapt to the various projects, because no project is like the other one. So,
and if I might jump in there, so your complexity is also somebody else's business model, maybe, right? Because there's a training ecosystem, and there's consulting, like very specialized tools. I'm still sometimes amazed by how complex things are. So I hired user experience designers, believe it or not, in the construction industry. So there's good money to be made on training and education and consulting about complexity. So that's like a self-revolving door.
Prophecy. Yeah. And just coming back to your point, though, Patrik, about those information exchanges, I think contract structures, again, reinforce some of the reluctance to exchange information with other parties, especially if you're in an environment where you get to the end of the project, it's delayed, there are cost overruns, and you're looking for someone to blame. If I share all my data with you, you can see that I made a mistake. So I'd probably rather not share it with you.
Yeah, exactly. And I mean, if you look at it from the project perspective, I mean, you need to get from A to Z somehow. But everyone involved is just trying to protect their bit in that process. instead of having this overarching view that we as a team need to get from A to Z in the most efficient way. And again, the incentive model and the fragmentation kind of interlocks here. Yeah. So it's difficult to break that up and get the efficiency that the industry needs.
I like that point, right? So we try to optimize some bits and pieces of the process, right? But in the end, I think if we make one step back, so I see two big levers in the whole construction process. So first, integrated project delivery, so working together in a different way. And the second thing is industrialized construction, offsite prefab. And I mean, also from a landowner perspective. So I think we should invest there, and maybe also the public actually and governments should mainly invest there. And then that's all fine, AI and tools, etc. But this should help those big transformations that are really, I think, necessary.
Renee, and this is exactly where you've been working, isn't it? In kind of architecture all the way through to design and delivery of modular buildings. So.
Yeah, absolutely. So we talk often about workflows and how to improve it, but we forget that the workflow itself should be changed. And one way to change it is system thinking. So we need to kind of, almost from the top down. I don't think it happens bottom up anymore. It doesn't just the current marketplace operating and trying to optimize their bit, it wouldn't emerge. I'm looking at the bottom-up systems, but I think that has to be forced top-down. So one common system, or not one common system, many common systems, but we agree what is the system. For example, we're building a school building or kindergarten, we agree of what system we're using. Not just saying, let's build a school building and then architects, you design something and then it goes to engineers and then producers. No, I think the buyer has to kind of say that let's work in this system. Let's use a modular or let's use some kind of other systems. It's not to say that we need to have just one system, but I think the system thinking needs to come in at some point.
I mean, one of the other topics we wanted to maybe get to later was about project versus portfolio, though, because one of the consequences of this fragmentation is you and I are working together on this project, but the next project, the investors, the developers are going to put together a whole new team. And so the investments that we make in working together, collaboration, information exchange on this project, to your point about valuing it, is they're not there on the next project because I'm working with someone completely different. So we're back to the beginning again of trying to figure out what's the tool, what's the platform that we're using for our information exchange. And after a couple of times, you know what? Let's just do it the old way because it's costing so much time and effort to try and move forward. Again, driven in large part because of the industry fragmentation. Philippe, I don't know if you've got any other points you want to add on the topic of fragmentation before we move on to sort of how do we value innovation, and how do you as an economist in particular then value innovation that's going on, particularly when we look at the economic value, but also the risk mitigation value that it might have, and what problems do you see there?
Yeah, so that's one of my favorite topics. As an economist, I think we all need to know, so if you're an investor or an investment manager, then basically you have the value of your building. So that's a discounted cash flow model. And we mostly talk about the costs, right? So construction costs, running costs, operating costs. But actually there's different pieces there. So first, what's your income? Rental income, for instance. How can we improve that? So with all the solutions we have, I think we also should understand how can we maybe increase rental levels. Talking here about timber, I love timber buildings and they have a higher willingness to pay. So that's one thing. And then there's risk. So you discount those cash flows and there's a risk factor. The less risk you have, the higher is actually the value of your building. But it's very hard to get that through. But we should all try to convince actually investors that risk matters. So if you know your construction cost better, if you know you have less problems after 5-10 years, so this matters in my view. And we should talk about this risk. So in finance, that's finance 101. You have expected return, and then you have volatility. And I think we should also bring that mindset to construction and real estate industry.
So would you do, for instance, sensitivity analysis, looking what happens if rents are up or down by 5%, costs are up or down, projects are delayed by 12 months, and look at how those different factors might combine to look at the value of your project? Does that kind of analysis typically happen on real estate projects? Because I think when we think about innovation, a lot of, when we're talking about modular, one of the things it brings is cost certainty, time certainty, quality certainty. And so we'd expect a lot of that sensitivity analysis to actually become a lot less sensitive because we can hone it down to a particular number. But that only really works if the economists are doing the sensitivity analysis in the first place because they can see the incremental value of that innovation. Do you see that happening, the sensitivity analysis?
Well, not too much actually. So theoretically it's being done, Monte Carlo analysis, etc. But then I also failed actually to also with evaluating companies to do that. But maybe another point you mentioned, time. So I was at the time when I was selling timber buildings to investors. One said me, "Well, to be honest, if we save 3 months' time or 6 months, it doesn't really matter in the process of 10 years." Yeah, that's maybe true if you have a B plan. So it can take a long time to develop a building. But then the answer as an economist is again, well, that's sunk costs. So let's look forward, right? So, I mean, if we can save 6 months, then it's really worth something. You have 6 months of additional rental income again. So, and then the conversation actually started to change. Yeah.
Okay, so if I'm trying to sell my innovation, being conscious of how people have valued their project, how they've valued the risks associated with their projects, is key if they're going to be able to value my innovation as well. Then, okay.
Yeah, I just want to pick up on that because I mean, if you look at the time scales that we use, we measure them in years. So instead of saying this design or this development part is going to take 2 years, and you save a bit of it, it doesn't really show up. But if instead you say, well, it's going to take 22,000 hours and we have 7,456 activities we need to complete in order for this to happen, then you start to measure it much, much better. So instead of looking at it with the weeks, months, and years that we do, we should become more granular in the way that we follow up and that we plan our work. In that respect.
Do people, when projects are finishing, are you looking back at how innovations have beneficially impacted the project and comparing that against other projects so that you can really see the value that it's created? Is that happening?
Yeah, but it kind of gets eaten up in a sense when you have these small increments in this large time scale. So I think the example where if we can cut off 6 months and you get your return much quicker, is a very good way to go. But you need to get there, and there's seldom that you will have one piece of innovation in one area that will give you those 6 months. It's the combined parts. And to get the combined, you need to start to measure the details. Okay,
so it's difficult to see the transparency of what's really contributed to the beneficial gain that you've managed to generate.
Exactly.
Renee, if I can just draw you in, because you're selling innovation as an architect that uses modular systems, what's your experience of been in terms of getting that value recognized? And it rather goes back to what you were talking about before, I think.
Yeah, and I think we had just a discussion with Philippe before as well about that we need to bring back the life cycle value. So look at the value in construction in life cycles. And that actually comes from the realization that some building typologies don't follow kind of linear pattern. And I'm talking especially about educational buildings. They actually value from the multiple life cycle view because they have to follow the demographics. In some parts of the city, the need for the kindergarten places goes down. What will you do with these kindergartens? Okay, well, you demolish them or what? You actually lose all of the value. Or do you take them apart into components, right? If you haven't designed those from a component, then that's going to be very costly. Your erosion value is high, really. But if you design it from the day one, and I think that's, in many parts for the clients to do, but also for the architects to do, is to design them for disassembly and reassembly. And okay, then we can talk about life cycle values. And my argument would be that you actually bring down the construction cost, but we do have to look at the life cycle value, not just the tender price for the first construction. You do it once, maybe it's used 10 years, you take it apart, you maybe lose 40% of the initial values, but 60% is still kept there, and the next building can benefit from it. There are examples on the market already where different construction companies coming in with renovated modules, and they win the tender. So, and that actually is a life cycle, thinking.
But we also come back, you're making a point implicitly there, I think, about procurement processes as well, about the way that people think about the value of what it is they're procuring, right? So they're not just procuring now, they're procuring 30, 60 years worth of value potentially,
exactly.
Which needs to be accounted for when they start the project. So already you've got clients there, I think, who have an appreciation or a different perspective on the value that innovation is bringing to them. Gregor, again, you bring a somewhat outside perspective to this. I mean, what are your thoughts on this?
Yes, so on what Philippe said, in the financial industry, you have like an amazing amount of information, right? You have leading indicators, you have future markets, so you can predict a ton of stuff, and there's like so many participants who bring good information to valuing something. In the construction industry, it's probably harder, and I think we're getting better at evaluating and putting value behind individual project results, but like outcome valuation across the entire development cycle and then delivery cycle is still, like, it demands pulling together and orchestrating a ton of information. And I think what's really exciting is that in addition to cost, there's now with sustainability, there's new KPIs that are attached to any building material, so you can factor that in. For the first time, there's also regulatory frameworks where you have to look at, okay, so what's the CO2 footprint of this, and how does it actually manifest over the lifetime of a building, for example, right? So, but still, I guess, and this is what we're working on hard, is we need to get better of pulling information from all sides and anticipating them and like valuing in scenarios and like pulling that forward into the planning and concept before construction.
There's definitely a couple of themes that are starting to repeat here about data, information, collaboration, sharing, which would certainly make it easier for us to introduce innovation into projects. We have a question here from the audience, and if there are any others, please continue asking them. Do we see differences across geographies in different markets for the appetite, the capacity to introduce innovation into projects? Does anyone want to volunteer?
Yeah, I'll stick my neck out a bit. Yes, there are differences. There are areas where you have a higher adoption of new technologies, and then you have areas where it's a bit slower and a bit more, basically a bit more slower when it comes to the uptake of new technologies or new processes. A bit conservative in that sense. And it's, being from Scandinavia, I would say that we're quite forward in Scandinavia, and the further south you move in Europe, the more conservative you becomes. Going even further south to the Mediterranean, we kind of have if you look at it, there's a divider in Europe. So you have the northern parts of Europe, which are more forward, and then you have the southern parts of Europe where it is more traditional and not so digital in essence.
I'm curious, do you have a view on what's driving that? Is it a cultural factor? Is it a policy factor? Is it access to innovation capital? What is it, do you think, that's driving those differences across different markets?
I think it's a combination of the technological maturity of the society as such, and also the access to new impulses is one main part, and then it's also how strong the call it the local construction parts are. So if you have a more open ecosystem and or a fragmented market, you tend to see a bit more competition and a bit more adoption of technologies. While if you have a market which is dominated by a handful, you see a bit less in general.
I mean, I would certainly agree as well, though. But I think there are some policy factors. There are some. If we look at, say, Australia, for instance, there's some real challenges around workforce, the size of the workforce, competition for workforce against the mining industry. I think the UK has had a big push from government to try and drive. I think questionable how success that's been, but that's been very much kind of policy driven and through the Crown, what's called the Crown Estate in the UK, to try and get more innovation in there. But definitely, I think to answer the question, I think we'd agree it's definitely different in different markets, and so finding the right market for your innovation is probably an important question. We just move on to on project versus portfolio thinking. I mean, when we were warming up for today's panel, that was definitely something that we got into, and it comes back to this point that we were making earlier about, well, if I'm looking at things on a single project basis, then actually the economics are really challenging. Gregor, do you want to pick up that question about how that's influencing our ability to integrate innovation into projects, because we're still thinking of them as one-offs?
Yeah, so there needs to be, for information sharing, we talked about incentives in the beginning, there needs to be trust too, right? So I think we have a technical challenge of sharing information, handing over data. All of that is solvable, and it's probably never been easier than now and in the future. But very often you also do have this projects being handled very atomically, because even if there's information, you want to double and triple check, and you don't trust where it comes from, and things are considered a black box. I see that in BIM all the time. Theory is great. We just heard it this morning from a bigger construction company. There's no trust in a model that has been handed over. We do a lot of software where you have all these cool computations of the cost and everything, but then, you know what, it's like, should we calculate all of this by hand one more time? Feels good, right? So there needs to be trust along the value chain as well.
Yeah.
And then we're back to incentives, really. And I think we do need innovation to have these lighthouse new ways of maybe solutions to bring out these cool project outcomes with a higher transparency thanks to more data getting into it, where we do produce these aha effects to say, okay, cool, this is actually so valuable to everybody involved that we do want to foster this tighter integration more towards a portfolio view. Yeah. And
yeah, I think that makes sense. But Renee, if I can ask you, because again, you've been working with modular systems, so do you find yourself having to use a different solution for each project, or are you able to build on previous work? I mean, what are the challenges that you've seen there, as because you're coming to your clients and you're seeing these projects as a portfolio, they might still be seeing them as individual projects, though.
Yeah, I think traditional way of approaching construction project doesn't really, incentivize, let's say, system thinking and reusing the projects. It starts with blank piece of paper, typically. And but I am a system thinker, and you can actually see the value already at the second stage when you apply the same system, typically. I see it in construction costs. Pilots, almost expensive. The first pilot is expensive. So, and this is the big challenge. How do you bring this innovation, you want to do with the pilot to the market if it's so much, above the market cost for the projects. But we need to really realize that the technologies that are out there are not necessarily better. They just have this, 20, 30 years of the development of the supply chain. Everyone is just used to them, and they used to deal with complexities. So the old technology is not necessarily, better. They just been out there for longer.
If I step in, so I would challenge a bit the term pilot. So I don't particularly like it because every project is a first in construction, right? So this fear of being first, I think we have to overcome that. And as you said, David, it should become a fear of missing out. So as soon as you have done the first project, and that's not a pilot, it's just a normal project, you work together, then it should be easier to have a second one. And then it's about the fee structure as well, right? So I think then we should think about maybe coming from a just hourly cost to other types. So I'm thinking about royalties, for example. So if an architect provides me their system a second time, so you maybe just become a royalty. So every time you work with the IP, so intellectual property, you become a royalty. But that, yeah, so...
Yes, I agree. I think it's the matter of perspective, right? But the incentive, like you, I think, suggesting needs to kind of benefit everyone, right? It needs to by both sides. Not that I keep it, I make something, I did it, and then I do it again, and I keep all the value that for doing it the second time.
Well then, we've identified quite a number of potential barriers from contracts, from project thinking, from lack of incentives. Who has to fix this? Right? So who needs to take responsibility to implement the systems thinking approach that you're talking about? Yeah, who's going to be the catalyst for change that is going to make innovation the obvious solution rather than the last solution?
Well, there's a simple answer: the innovator.
The innovator has to lead the change.
I don't know. Actually, it's a very good question. What do you think, guys?
Patrik, you look like
well, I think we're being pushed in a way through legislation. We need to transition from project thinking into product thinking. And look at a lot of the EU legislation that's coming. Yeah, it is. You need to have a product declaration for your building. So if I would say yes, legislation will help us on the way, but then you're going to need to have some leaders that take the first steps in this.
Well, I'm usually not the first to ask for government help, but here, when let's say municipalities they want to have schools, and at the same time several municipalities have that wish. So please group together and ask for innovative systems in whatever whatever type actually. So here government could be the role type, and this kind of being really a good landlord actually.
Yeah, the public sector, I think often. In my country, in Estonia, the public sector has clearly taken this role. I think in some cases, reflecting the earlier question as well about where is it easier to do innovation in some regions, I say it's super important way you do it in terms of the size of the place, of the country. In Estonia, we got only 1.3 million people, so what that, 1/3 of Hamburg, less than that. So getting to talk to a minister is easy. Doing it in the UK, David, not so easy.
Challenging. Yeah. Gregor, what's your thoughts on this, right?
Well, ultimately, the market and competition is going to figure out a lot, I think. My hypothesis is that the pressure to innovate and implement AI, be better at data interoperability is going to crowd out smaller players. I hope that there's going to be some front runners who do really well and pull the market too. But we're probably going to be one of the last markets where that frog is boiled. So we're probably like a laggard as always, but I do think it's going to happen.
Yeah, I must admit I'm quite scared. I don't know the answer to this question because although we say it should be government, I think we can look to the UK, we can look to Singapore, we can look to Switzerland in terms of the school system, where the government's already taken a lead for a decade and private sector's not followed, at least not at scale yet. And I must admit, I'm curious to understand still what the interrelated set of barriers are that is frustrating the adoption by the private sector, the private developers particularly, of these more innovative solutions. As we're coming towards the end, so one last question for you. And Gregor, maybe we'll let you start off on this one since you brought it up. AI. So what impact do we think that AI is going to have on addressing the barriers that we're talking to, which will make it easier for various forms of innovation, physical and digital, to find their way into construction?
Yeah, we're not going to evade it. I think there's a lot of that AI can do to tackle this entire complexity, like pulling together all of these information and driving the heuristics from concept to planning, through construction to delivery and operation. There's probably barely any project where all of the information have like fully been pulled together, and that is going to happen in a way that is understandable, because the data orchestration is going to be beyond anything that has happened before. Nonetheless, there needs to be a lot of stuff that is not going to change in the Construction Institute, right? So a lot of the calculation is not going to be, there's no wiggle room for hallucination and things going wrong. So I think this is going to be slowly but gradually getting better. And I hope that, that we're doing it right. And I hope that we're going to see some innovation coming out of that in the next 2, 3 to 5 years. You see big players, especially in North America, getting into the construction industry. And that is going to be very interesting. And I think it's going to be a little bit of a nudge in the right direction for everybody involved.
Yeah, it would certainly be interesting to see how AI can process those huge quantities of data, which at the moment are very difficult to line up, to try and, a bit to what you were saying, Patrik, reveal the value that different innovations are having on our ability to deliver better buildings.
Yes, just to follow up on what Gregor said is, yes, of course, this interoperability of data, AI is going to have a huge effect. So kind of this automatic adopt and connect type of scenarios, but also to be able to capture the data at the source. So we start to get this trust that we're missing in the information that today is carried by BIM models, but in the future will be carried by some information highway that AI will help us monitor and feed.
Philippe?
Of course, on the main stage, I should say AI will solve everything. But between us, I think AI is best for messy data, and here data shouldn't be too messy actually in a construction process. So I think we should more invest also in personal relationships, convince each other, those type of summits. I think it's an excellent place to exchange and convince people.
And Renee, again, as the architect, the creative voice on the stage, how do you see it affecting what you do?
I wouldn't use AI for creative work. Why to take the most exciting thing out of your work? AI has this tendency to, speed up things, make it stronger, force a jump higher. If you slap AI on existing construction system, it's going to make it worse. You have to use it for decision making.
You're absolutely right. We can dig the hole faster, but it might not be the right hole. Absolutely. So just to wrap things up, thank you very much for taking 45 minutes with us. I think our key messages are that many of the reasons why innovation is not being adopted are really non-technical. The technical solutions are fantastic. They're more likely to be human solutions about the way we work together, the way that we're rewarded financially, both individually and companies. Our preference to work with older ways of working, to reuse older contracts and on older systems, and really to be conscious of those non-technical barriers when we're trying to sell and introduce innovation into projects. It leaves me only to thank my colleagues here on stage, Renee, Patrik, Gregor and Philippe, and to thank you for listening to us for the last 45 minutes. Thank you.